Does real estate appreciate faster than inflation? In this video, we're going to talk exactly about that. Again, what's the best hedge out there? We're going to talk about how inflation tracks with real estate, how real estate can beat or get below it, and how that affects you and your family's financial economics and prospects. Now, here's the really cool thing about this. By the time I'm done with this video, you'll understand squarely why it's very important to buy as many pieces of real estate as you can to provide financial independence for you and your family. And hopefully that's what you're looking for, or you wouldn't be watching this video. Although I did get a haircut today and I'm extremely handsome, I will admit to that. Anyways, all right. Oh, also, I got a bonus for you. Big bonus, okay? Stick around to the very end. We just went into the studios. We got some brand new training and all this. And we're going to show you how to get access to all that at the very end. So stick around for that. Real estate doesn't move up faster than inflation. It's kind of a loaded gun. When did it go? When are we talking about? Right now? Are we talking about 1979 when Jimmy Carter was president? Absolutely not. Inflation was at a whopping, I think it was like 13% or something crazy like that. Interest rates were at 19 to 21% at the bank. It was dismal at that point, and real estate wasn't going up that much. We've got the recent market of the free money from like 2016 all the way to 2020 during the pandemic, and real estate's soaring past that. And then you got inflation comes back again at 9%. Real estate's kind of stagnant around that area, but you've got historic markers for that. A better way to ask the question is it a good idea to buy a piece of real estate versus other investment strategies? Again, I'm a little biased. That's like saying, is your daughter good looking? Of course I'm going to say yes. I love real estate. It always appreciates. You know, sometimes it has its dings with the economic forms out there, but it's always going to go up. I've said this a million times and I'm going to say it again. I've always regretted selling a property 5 years after I sold it. And I once asked a real estate investor, I said, I know you've made some money, okay? But I thought about this just with my own portfolio. If I were able to keep every single piece of real estate I ever owned, what would that value be to me now? And it's just staggering. We both laughed. So, you know, a question to be asking yourself, not a better question. Yeah, real estate is a better hedge against inflation than almost anything. Will real estate rise faster than inflation? Sometimes. Sometimes it won't. In the long run, it's always going to win out in the United States. There's things that make real estate go up. It's population growth. You got economic conditions in that particular area. Then you've, of course, got limited land. They're only building so much of it. If you look at California, 90% of its population lives on the coast. Why? Because that's where everybody wants to live. Nobody moved to California to live in San Joaquin Valley. Okay, no offense to anybody in San Joaquin Valley, but it ain't San Luis Obispo, Santa Cruz, Carmel, San Francisco. I can keep going down the list. Okay, that's where everybody wants to live. But yet there's not enough land for everybody to buy. So what has to happen? Supply and demand, it's going to go up. There you go. So understanding population, economics, and limited space, that should be your driving factor into getting some appreciation. One of the things I want you to look at is, what are you trying to do? Are you trying to create wealth, or are you trying to make money? Now, within the family of real estate, the easiest and quickest way to get ahead, period, end of story, is buying what they call tax lien certificates and tax deed properties. Now, a tax lien certificate is very simple. When a property owner fails to pay off their property taxes, the county government's going to hold a sale. And at that sale, people like you and I are going to come up and put up the money for those delinquent taxes. Now, for putting up that money, the county is going to give you a certificate. That's going to go on file down at the county courthouse. That is a legal document, okay? When the property owner comes down from wherever to the county to pay off those delinquent taxes, they don't go, why? Why did this person buy that? They have to just pay the back taxes, and they tell them what the penalty is. They don't even know it went up for sale. So as soon as that transaction happens with the county, they send me back my money, plus my prevailing interest rate, which can be anywhere from 16, 18, even as high as 25%. Not bad. But what if they don't come in? So that's a very good question. So the underlying security the county is giving you for being so kind to give them the money so they can continue to operate the county, meaning roads, bridges, fire department, number one, school districts. Okay? They say, we still need this money whether the guy paid it or not. We'd love to give you the opportunity to make the money on it. Meanwhile, we got to keep our schools afloat. That's how that works. Now, the second side of that, some states, though, we don't want to sell it up front. But after 5 years, come on, enough's enough. What we're going to do is we're going to go ahead and sell the property for several years back taxes. So that person, in most cases, has to be delinquent a minimum of 3. Most of them are going to be 4, though. So that means they've been delinquent 4 years. Okay, so this is how I go in and I say, well, here's a piece of property that's worth $250,000. The opening bid in back taxes is $15,000, which means if I put my hand up and I own that property at $15,000, it's a good deal. Now, more than likely, there's going to be somebody else there. They might bid me up, and I'll have my strategies later on for how we just establish the maximum bid on it. But the point is, let's say I end up getting it for $100,000. Okay, you've got a property at less than half price. So it's the best way to hedge against inflation because you're getting something of value at a deep discount that literally the next day you close on that property, it's going to be a backup where it should be. Understanding these strategies, understanding the economics of it, the growth, population growth economy, and limited supply is super important. But also not getting caught up in the day-to-day stuff. If I was to go to a football game and I only looked at one play to determine what the outcome would that be a very good barometer? No, it's not. So if you're saying, oh my gosh, I heard somebody say this, I sold my property at the wrong time. Inflation was high and I wasn't able to get what I wanted to get for the property. I just kind of shrugged. They said, okay, Mr. Real Estate Man, what would have been your strategy? I go, don't sell. Just wait for the market to go back up and go, well, I need the money right now. You didn't put that factor in there. So a better question is why do you need the money? Where was the mismanagement maybe? Second thing is, then don't sell the property. But I need the money, then pull some cash out of it. So there's all sorts of different ways to get at this. I was just talking to my son today, and I said, hey, good news. I got these 2 properties coming up. I got 2 brand new investors card. And he just started laughing because he knows, to me, a credit card is an investor card. So I got 2 cards with a 0% interest, one with 14 months, one with 24 months. I don't have to pay any interest on it. So I can go in and get one of these properties, fix it up, value goes up, I can get a conventional loan on that, pay that off, and go do it again. So I'm purely using other people's money. Can't do that with anything else. I mean, it's a very, very powerful strategy, and those are the things I'm looking at. Now, listen, I covered a lot of information. Tax lien certificates paying 16, 18, 25%. We got tax deeds where you're buying the property for the back taxes. There is a lot here, and you need to get smart. You need to get good at this. The best way to do that is go down to my link, click on higginsmethod.com. Watch the introductory video on there, and I give you a free course. This is a brand new course on exactly how to do everything I just talked about and a lot more. This is Saen Higgins saying God bless and good luck. We'll see you out there.